In less than 24 hours, one of the biggest gold markets in the world will change the rules. On July 24th, several of China's biggest banks are shutting down retail paper gold trading, forcing investors to either close their positions or take physical gold delivery. Now, on the surface, this sounds like a technical banking change, but make no mistake, if you own gold or silver or are thinking about buying either, this matters more than you think. Because for decades, the price of gold and silver has not been primarily determined by physical buying and selling. In fact, price is largely determined by paper markets, where far more paper trades hands than the physical metal ever does. And if you follow the price of gold or silver, you've probably found yourself wondering on more than one occasion why prices are getting slammed when all signs point to a value that should be far higher. For gold, it's central banks buying in record quantities. It's wars and conflict and an endless currency creation. For silver, we have a 6-year supply deficit and a growing industrial demand. And yet the prices don't reflect the fundamentals. See, in a normal market, more supply, less demand pushes prices lower, whereas less supply and more demand pushes prices higher. It's economics 101. But the truth is, if you take gold, less than 1% of all total gold contracts actually result in physical delivery. All the rest are settled financially with more paper, which allows multiple claims to be issued against a relatively small amount of physical gold. This is a process called rehypothecation, or creating layers of claims on the same underlying asset. It would be as if I created 10 IOUs on my car. That doesn't magically mean I created 10 more cars. It just means I now have 10 people who all believe they have a claim on my car. Now, this scheme works fine, as long as no one asks for the real thing, which is exactly what physical gold and silver holders have been pushing for, because this goes way bigger than just some financial paper trading. No, over the last few years, big banks have gotten caught spoofing or creating massive orders that they had no intention of executing just to manipulate the spot price of gold and silver, whereby they can then profit off of prices going up or prices going down, whatever benefits them. Look it up. Several large institutions have gotten caught doing this exact practice and have had to pay tons in fines. But that being said, let me know in the comments, do you think that this practice has stopped? Do you think the manipulation is over, or do you think that banks and large institutions are still getting away with it today? Tell me your thoughts in the comments below. If you ask me, not even close. But the more that physical starts to compete with paper, the harder it is for paper to have that same monopoly on the system. And this is where China comes into the picture. Beginning tomorrow, several of China's largest banks are shutting down retail paper gold trading, forcing their investors to either close their position or take physical delivery. Now, the official explanation of why they're doing this is to protect investors from extreme volatility in terms of price, which makes sense on the surface. But if you dig a little bit deeper, if you zoom out, I think it's just one part of a much larger story. It all has to do with timing. This move doesn't exist in a vacuum. If you look at the last few years, China has been making massive gold and silver, physical gold and silver moves, whether it's expanding the Shanghai Gold Exchange, just recently launching their new physical clearing and settlement and vaulting system in Hong Kong, or China itself buying gold for their reserves for 20 months straight, and that's just what's been reported. Not to mention, China also has been building the Gold Corridor, or a series of vaults all over Asia, ranging from Dubai, Singapore, and soon Saudi Arabia, to settle in physical gold. But here's why any of this should matter to you. We've established that for decades, price has been largely determined by paper markets. You could have millions of ounces be traded in a second and nothing physical ever moves. But what if price discovery started to shift from paper to physical? What if it shifted to somewhere that increasingly valued physical over paper, where you couldn't just push a button and create the illusion of supply or demand? In that scenario, real supply would become the limiting factor, and China has made it no secret that they have a strong emphasis on physical gold and silver, and that they would like to make sure that moving forward, they are the center of price discovery. And this is how they're going to do it: by building a physical system. And in a world that runs on credit, debt, and broken promises, increasingly sovereign nations, institutions, big buyers, they all want something they can actually trust. And at the end of the day, physical gold and silver is the only asset, right? These are the only things that you can have that don't have counterparty risk. Because if you have paper gold or silver, or paper gold or silver price exposure, it's great for that price exposure. But if you're trying to actually protect your wealth, especially if you're concerned about the entire house of cards coming down, you don't want to be on the other side of an institution or a bank or a promise in that situation. You want to make sure that you hold it yourself, that you are your own bank, because relying on someone else in that situation leaves you open to risk. So you yourself can do this at home right now by owning your own physical gold and silver. But when we zoom out and look globally, China is trying to establish themselves as the future center of gold or silver, and they're doing a dang good job. Now, I'm not saying that on July 24th, tomorrow, that suddenly gold prices, silver prices are going to go through the roof. That's not what I'm saying at all. In fact, that's not what I believe will happen. But it is one building block in a wall that they are building between the East and the West, shutting the West out with all of their paper nonsense and making sure that the East and physical gold and silver are established, which in the long run will create a true price discovery for physical gold and silver, far more than what we're getting today. The West treats it like a trade and the East treats it like true money, which is why it's so important to understand the difference between ownership and price exposure. Now, if you personally out there own physical gold and silver and have been thinking about getting more, or you don't have any yet, and you're scared about what's coming next, or you understand these big moves that are happening, but you want to learn more, you have questions, that is what we are here for. You can call us at the number below. Call us. Talk to one of our expert analysts. We have 30 years experience helping people just like you prepare for what's coming next, because all these moves that are being made by the East are going to pay off. And that's why it matters so much, not just what you own, but how you own it. So again, call us at the number below. You can click the link in the description to set up a time to talk to one of our expert analysts. Or if you want to learn more about gold and silver, you can always download our gold and silver guide completely free by scanning the QR code. But we are here for you. And if this video is helpful, please share with a loved one. And as always, thank you so much for being here. I'm Taylor Kenny with ITM Trading, your trusted source for all things gold, silver, and lifelong wealth protection. Until next time.